Good afternoon and hello everyone. Welcome to today's webinar, COVID-19 CARES Act, a closer look with IEDC. Before we get started, I would like to go over a few items so you know how to participate in today's event. You may have joined the presentation listening using your computer's speaker system by default. If you would prefer to join over the telephone, please select phone call in the audio pane and the dial-in information will be displayed. You will have the opportunity to submit text questions to today's presenters by typing them into the question pane of the control panel. You may send in your questions at any time during the presentation. We will collect these and address them during the Q&A session at the end. I would now like to introduce Mignon Hollis, Executive Director at the Arizona Regional Economic Development Foundation and 2020 Chair of the IEDC Public Policy Committee. Welcome, Mignon.
Thank you for that warm introduction. Welcome, everyone. Just wanted to go over some quick facts before we get started. As of today, and all of these numbers continue to change. We have over 1 million confirmed cases of COVID-19 globally. We have over 236,000 confirmed cases in the United States, with over 51,000 confirmed deaths globally, over 5,600 confirmed deaths in the United States. We've had over 10 million unemployment claims filed in March, 6.6 million filed first-time claims in the last week of March alone, besting the previous records by millions. 695,000 people filed for unemployment during October of 1982. During the Great Recession, it took 6 months to climb up to 10 million, and it's just been done here in 2 weeks. Unemployment in March rose 4.4%, which is a precursor of what is yet to come, with some economists saying that a 15% unemployment rate could be in our future. The third COVID-19 related bill from Congress, known as CARES Act, included $2.3 trillion to help the country, governments, organizations, and businesses respond to the crisis. IEDC has been heavily involved from Washington, providing resources and updates to our members and representing us before Congress and the administration, and we're quite grateful for that. They have much to update us on, and so we're going to get started in just a moment. As Erica said, please feel free to ask your questions throughout the presentation via the questions tab in your GoToWebinar dashboard. We will answer all the questions or try to get to as many questions as we can at the conclusion of this webinar. Just a reminder, a recording of this webinar and slides will be made available upon the conclusion of the webinar. I'd like to now turn this over to our esteemed President and CEO of IEDC, Jeff Finkel.
Thank you, Mignon. It seems not that long ago, when we came out of the previous recession, that we were spending a fair amount of time talking about the Stimulus Act. That was a little less than $1 trillion as we were dealing with the recovery of our economy at that point. I never thought we would see something quite as big as that again, but here we are with a $2 trillion program and maybe more on the way. So let me tell you what we're going to try to accomplish here. We're going to give you a brief overview of the law, and we're going to talk about economic development deeper dives, what else is in here, and frankly, looking forward to a fourth bill. The CARES Act was a $2.3 trillion in direct spending, grants, loans, and loan guarantees. Included in it, $376 billion in SBA loans, grants, and guarantees. $150 billion in direct funding to states for COVID response, $5 billion for the CDBG program. In addition, $150 million for the National Endowment for the Arts, $50 million for the Manufacturing Extension Partnership Program, $500 billion for Treasury and Federal Reserve, and $1.5 billion for EDA. In addition, I'm sorry, Matt, I may have just wandered through some of the things you were supposed to talk about. Would you like to add some additional items here? Matt, if you're talking, you may be on.
Yeah, sorry about that, Jeff. Yeah, I can see that the presentation is a little stuck at the moment, and we're trying to get it unstuck. But you have covered all of the high-level details. Nothing to add.
All right, thank you. So let's talk about the programs at SBA. There are several programs that were funded at EDA. The first one was the Paycheck Protection Program, or what is known as the PPP. That opened today, and it opened with a number of problems that are existing across the country. I have had notes from North Dakota that says that the PPP program does not lead you to the various 7A or other lenders that can actually undertake a PPP application. I am told by one of the major lenders in the country that they just got changes to the program last night. I got another email from another member that says they're anticipating a number of problems as they go through this. So let's deal with the fundamentals of this. The PPP program is essentially for businesses and 501c3, small businesses and 501c3 organizations. As most of us know, the definition of small business is for organizations that are under 500 persons. The PPP can be used for payroll, insurance, rent, mortgage, and utilities. It includes very favorable terms. Payments are deferred for 6 to 12 months. There is potential loan forgiveness for up to 2.5 times of eligible expenses paid for with PPP for the first 8 weeks. And so there are a number of people, number of organizations that are trying to get that because of the deferment or the forgiveness part of the PPP program. The second program is the Emergency Injury Disaster Loans, or the EIDL. This program was expanded to include more categories, which included tribal businesses, cooperatives, ESOPs, sole proprietors, and some nonprofits. It has similar broad waivers. The interesting thing about this particular program is upon successful application, you can get a $10,000 emergency grant, and it is a grant. It is non-repayable. The next question is, who should you talk to? For the PPP, it's 7A lenders. Local lenders that are not currently 7A lenders could also become one for the PPP, although many of those lenders may have lending caps on top of them. For the EIDL, SBA has a streamlined application on their website. And as I indicated before, the money can be used for payroll, insurance, rent, mortgage, utilities, unlike maybe the 504 program, which has to be used for capital improvements. There is also existing loan relief. SBA will cover all loan payments, principal, interest, and fees. This lasts for 6 months, and this includes existing 7A, 504, and microloans. The businesses receiving loan relief may still apply for PPP, and fees are permanently waived for veterans and their spouses in the 7A Express Loan Program. Next, you have support for entrepreneurs. $265 million in grants for entrepreneurial development programs, $10 million for education and training of minority businesses. By the way, that does not come out of the SBA program. That comes out of the Minority Business Development Agency. Match requirements for the women-owned business centers is waived for 3 months. And the STEP program funds from FY 2019 2018 are available through 2021. The next program is at HUD CDBG. For the other people that are organizers, if you could put your phones on mute, that would be helpful. The deeper dive on CDBG. The Congress gave HUD $5 billion for the CDBG program. $2 billion go into the entitlement cities pot, and that allocation, that money needs to be on the streets within 30 days. They've given $1 billion given to states, and frankly, that is supposed to be mostly used for direct combat of COVID-19, and that can go to both entitlement cities and their small cities program. And then $2 billion is being directed to other communities as determined by HUD under a formula that includes economic and housing impacts of COVID-19. The interesting thing about this is there's going to be a number of changes to the CDBG program for these purposes. But people you should talk to are state and local authorities involved in the existing grants. You may want to coordinate immediate requests with local officials and stakeholders. $3 billion is being pushed out using existing formulas. But the grantees are able to prepare or modify their statement of activities using an expedited process. Virtual public hearings are allowed under this, and there are some broad waiver authorities that are given to the HUD secretary, and it suspends the 15% cap on public services. If I were an economic development program and I was losing some of my private sector support, or I was within a government entity and thought that I might have layoffs, I would try to figure out if one of your local entities could give you block grant dollars to continue doing your ongoing functions. It seems to me that the block grant program in this particular case is being allowed to use quite broadly, and particularly in eliminating the 15% public services cap. There are opportunities to use the block grant dollars in different ways for economic development purposes than necessarily just assisting a business. There is going to be a great deal of pressure put on HUD by Congress to get this $5 billion on the streets as quickly as possible. I would think that communities might not necessarily want to put this money into construction projects because frankly, if you're funding a new construction project, you may be 18 months to 2 years away from actually putting the money on the grounds. For economic development purposes, revolving loan funds for businesses, things that are going to re-employ people immediately or quickly would be how I would think that Congress would expect you to get the money on the streets as quickly as possible. The next programs is EDA. EDA got $1.5 billion in additional funds. I'm not going to suggest that I know precisely how EDA is going to distribute their money, but if I remember correctly, there are 6 regional offices. That should be $250 million for region. I'm not sure all the regions will be the same in terms of the impact by COVID or are the same in terms of population. So that may well be some of the differences in how EDA eventually passes that money around. Now, this is an agency that only gets about $300 million in annual appropriations, and Matt points out that EDA received $1.2 billion total for the previous 2 disaster supplementals. So frankly, this is going to be more money than they've seen at one time, probably ever. Who should you talk to? I would talk to my development districts. If you know who typically handles EDA dollars within your region, I would talk to your regional office. I would talk to your economic development representative who works for EDA. I would talk to whoever is managing your EDA revolving loan fund within your particular area of the country. How will the money be used? I think a fair amount of that money will be going into revolving loan funds. I am told there are about 500 of them that exist around the country. They may be trying to fund some new ones through state governments, technical assistance, and shovel-ready projects that might be able to go into the ground immediately. I would say here again, if you are an economic development entity that was worried about your funding stream, you may want to go to your regional, you may want to go to your local development district and say, you know, I may have to lay off people. We should not be losing economic developers at this particular time. And I would think entities that are managing funds for EDA or HUD, CDBG would want more partners on the street. So you may be able to get a position funded for a year or 6 months or 2 years out of some of these monies that are hitting, that are coming their way fairly quickly. The last, I'm going to turn the program over to Matt, who is going to start with the U.S. Department of Agriculture Rural Development Programs. Matt?
Yes, sir. I'm here. Thank you very much, Jeff, for taking us through the first big chunks of this bill. We're going to continue on and talk a little bit more about some additional federal resources that have been put out there. Again, as a reminder to folks, please drop your questions into the question box. And the most frequently asked questions, is the presentation going to be available and will there be a recording? The answer is yes to all of that. Phil, if you can go ahead and take us to the next slide here, we'll talk about the USDA's rural development allotment. One back, Phil, one back. There you go. So the USDA Rural Development Program received about $145.5 million, which compared to a lot of the other offerings seemed pretty low, but it's important to note that the USDA received quite a bit of additional funding in other areas outside of the economic development space. So for USDA, we see $20.5 million for the Rural Business Cooperative Service. This is expected to leverage up to $1 billion worth of lending authority. The rest of the money is directed mostly towards broadband. They're looking to provide resources to rural communities so that they could take advantage of what will probably become, unfortunately, increasingly important telemedicine products and distance learning as well. So that's it for USDA RD. If we take a look at the next slide, we will talk about what else is in here. And states and localities received $150 billion in grant funding that will go to states, tribes, and local governments. This funding is specifically for response to COVID, and it's specifically for expenses that have already been incurred over the course of the last few months as well as anything that might be coming up moving forward. And this is the federal government acknowledging that the states are carrying and have carried to this point a very large burden that has depleted a number of resources. So it'll be distributed proportional to size, a minimum of 1.25 billion for states with the smaller populations. And so that's $150 billion again in grant funding. Phil, can we go to the next slide here, please? Great. So in talking about unemployment insurance, we have a number of resources that were put into this pot. Starting off, we have a whole new program, Pandemic Unemployment Assistance Program. This is created for the gig economy, for the self-employed, independent contractors, and folks that have a limited work history. So this is, trying to catch anyone who isn't traditionally covered under the traditional unemployment insurance programs. So for both the UI recipients and the PUA folks, they're going to receive $600 per week in supplemental funding for everyone for up to 4 months. So that is not for the full length of available unemployment insurance. It is intended just for up to 4 months. It provides an additional 13 weeks of benefits for states after their unemployment insurance expires. Additional provisions for states and nonprofit expenses. The federal government will pay up to 50% of UI for state or nonprofit unemployment expenses. 100% first week costs. So typically you'll see a first 1 week delay, the first week delay in unemployment insurance programs. The federal government is saying if a state will waive that, the federal government will pay 100% of that first week cost. And then in terms of short time programs, the federal government has said through the CARES Act that they will pay 100% of any short time program costs. And so short time is essentially if you have reduced hours at work, but you are still on payroll, you can apply for that bridge between what you're currently getting and what you were previously getting. States that have existing programs that cover that get 100% paid for by the federal government. States that start a program right now to cover short-time costs, the federal government would pay 50% of those costs. And so as you can see, there's a pretty big effort in the unemployment insurance space to catch as many people as possible and to keep as many people whole as possible. Phil, we can go to the next slide, please. All right, and so here it's just a handy slide for folks to kind of see some of the financial resources that are being made available across a couple different platforms, from the unemployment benefits to the one-time payments, and then the additional items through SNAP and the sizable student loan deferment effort that will assist a lot of people. Phil, we can go to the next slide. Tax provisions for businesses. So aside from the loan guarantees and grants and all of those offerings, there are some tax options out there. The biggest probably being payroll tax deferments being deferred and payments being spread out over 2 years. We're also seeing allowable deductible interest expenses that can be claimed going from 30 to 50% for both last year and this year. As well as a 50% refundable payroll tax credit during the COVID-19 crisis. And so that period in this specific program will run March 13th of this year through December, I think that's a typo. It should be December 31st of this year for covering the refundable payroll tax credit for that period. And that will be for businesses either fully or partially shut down or have seen a decrease in receipts versus the same quarter in the previous year. And we can go to the next slide, Phil. And then we have our community service block grant program, and this is actually run out of HHS. A lot of folks might not be aware of this program, but it's providing $1 billion to help communities address consequences of increasing unemployment and economic disruption. And so we'll be seeing more about that program over the weeks ahead. So we can go ahead and go to the next slide. And then we have this. This is the kind of sort of question mark, or one of them within this bill. The amount of money given to the Department of the Treasury and the Federal Reserve Bank, $500 billion for loan funding. And so this pot of money is for everybody that's basically not eligible for that SBA money. So this is going to be for 500 and more employees, and not just employees in the sense of businesses, because it is available for state and local governments. So a portion of this is going towards some industry, we'll say bailouts for want of a better term, but $25 billion for air carriers, $4 billion for the cargo folks, $17 billion for businesses important to national security, with the balance going to the Federal Reserve. And what the Federal Reserve is going to do with that is really the question mark right now. There hasn't been too much information out, but you know, they will act in a few different ways. Probably as a primary credit facility, where businesses are able to go directly to the Fed to access these loans. On a secondary market, you know, they'll be buying buying loans from banks that are lending to businesses. And then there's a kind of a third pot that still has a lot of question marks around it, is how is it going to get the money out to businesses, states and local governments. And there's as you can imagine, a big appetite to hear what the Fed is actually going to end up doing with this. But the potential is huge, as you can see. I mean, the Fed typically uses a 10-to-1 ratio. So for every dollar they spend, invest, or otherwise, it can leverage 10. And so that's how we get to this 4 trillion-ish number in terms of potential activity. So we'll be watching that closely to see what will be available for economic developers. The terms on this pot of money are not at all like the terms for the SBA money. And that is that they can't be forgiven. There are requirements that credit is not available elsewhere. There are requirements for worthiness and abilities to repay and all that kind of good stuff. So while it is a large amount of money, it does not come with some of the enticements that the Smaller Business Administration money does come with. And Phil, why don't we go to the next slide here? And so just kind of looking ahead, you know, we got an imperfect bill in the CARES Act. It was expeditious, and it was felt that it was necessary. There have been some noticeable kind of bumps in the road, some big items being you know, the rebates. There's been a lot of talk from Secretary Mnuchin over the last several days about how Treasury and the IRS is going to get this money out. Yesterday's news, and it seems every day has a new angle on this, but they're hopeful that they're going to.
Matt, we lost you. Mignon, can you
pushing
hear me?
money out the door in the next couple of weeks, but some people can be waiting until September. And so I imagine. Can you hear me?
We lost you for a minute, Matt.
Yeah. Is it possible for you just to go back and recap your last slide, because you cut out a little bit there on us, Matt?
Okay, sure. Is this the looking ahead slide or the Treasury and FRB slide?
It's the Treasury and FRB slide.
Treasury. Okay, yeah. Phil, do you want to just take us back to that slide, please? Great. I won't recap too much. I'll just do the really fast 10-second elevator. This is $500 billion. It's intended for the bigger businesses, not the smaller businesses. It's also available to states and local governments. We're waiting to hear how these things will be made available. The Fed has just not come out with those details yet. They understand, of course, like everyone else, that this is urgent. So hopefully that will come soon. It is a considerable amount of money that will be made available through these loans directly from businesses. They can go to the Fed. The Fed will also be purchasing loans, and they'll use that money here as well. And then there'll be some sort of kind of third vehicle or facility that they will use to push this money out the door. But the big takeaway from this, aside from the amount of money, is the leverage capability here is pretty huge. So it is encouraging, and we'll be looking to see what that looks like. Phil, why don't we go ahead and go to the next slide? Yeah, so just again, you know, the CARES Act is an imperfect bill. It was moved very, very quickly. You know, I've been in DC for a while now. Jeff's been in DC for a while now, and we haven't seen anything like this before. And it's an unprecedented situation that required some pretty unprecedented actions. And you know, when you look at the complexities of everything that was done, there are going to be flaws. And we'll talk a little bit about how those are going to be addressed. But you know, some of the things that we've seen, of course, are the rebates. You know, the timing on that. You know, when there's a need, it just never moves fast enough. And Treasury is saying that the money will start moving in the next couple of weeks, but for some people it may be September before they receive theirs. 501c6 is being excluded from most provisions within the bill is a real problem for many of our economic development members. You know, C6s cover business councils and chambers of commerce and those sorts of things. And we've had some conversations about that, and we'll talk about it a little bit more later on in the presentation and Q&A. You know, we saw some bailout money for the airline and air carriers, but there's obviously other industries that are hurting significantly. The hospitality industry, you know, their associations are predicting just end time levels of decline, and the impact on the economy is going to be in the trillions, just from the hospitality industry. And then, you know, the whole issue of was $2.3 trillion enough? And you know, regardless of who you talk to on which side of the aisle, I think most of them are telling you no. And I think that they knew that going into it, and knew that there would be additional bills coming, and that this was not so much a stimulus as it was a rescue bill. Can we go ahead and hit the next slide here, Phil? So fourth bill, sooner than we thought. The Congress is in recess right now until I think April 20th. That doesn't mean that staff aren't you know, working remotely on what's coming next. I think, you know, there was a thought that this COVID-3 bill would get us you know, further on than potentially it's going to be. You know, as Mignon pointed out and Jeff has pointed out, you know, the situation is much more dire than was even predicted a week ago. And so this COVID bill that was passed was done based on information that is now known to be, you know, off. And so fourth bill might come sooner than we think. I mean, it's possible by the end of the month, and that it will include fixes that are you know, necessary. So you'll see hopefully some things that we were looking at on EDA related to defederalization of revolving loan funds, giving them a little more flexibility to say no match, that their funds for disasters, both this and previous, will be able to move without any match requirement at all. You know, those types of technical fixes are all but a certainty, and it will absolutely include more money. The question is, you know, how much will it go into pots that were created in this third bill, or will new programs be identified for additional funding, and how those things will be addressed? Phil, next slide, please. And here's where we're going to end and transition to questions. I can see that there's quite a few, but here's some resources that will be included in the slides that you will get. They may all be things that you've looked at, but you may not have them in one place. And I always find these types of slides at the end to be helpful. The bottom 2 bullet points I'll just take your attention to briefly. That congress.gov website takes you to the actual bill text, which gives you your own perspective. You can read it for yourself, and I encourage people to do that if you can find the time, over the course of the weekend, to take a look at that. Whenever Congress passes a bill, the administration is responsible for interpreting and executing that bill. And sometimes their view on it is very different from what Congress intended, and sometimes their view on it is very different from what their constituents think it says. So to become more informed, I encourage you to take a look at that. And Goldman Sachs they've got this resource page on their website that has some good materials and good things to take a listen to, that I was listening to earlier this week, and I encourage folks to take a look at that. And with that, Mignon, I will happily put it back into your capable hands.
Okay, thank you. That was a lot of information, and we apologize for the technical difficulties that we had at the beginning and a little bit there in the middle. Just want to let you all know that we have over 600 people on the call, and so we're trying to get to as many of these questions as we can, and I'll rely on both. I know Jeff's already answered some of your questions right there online, but we'll hit some others. And Matt, as you see questions come up, please feel free to chime in too. One of the earlier questions was, if a business doesn't have a relationship with a 7A lender, how do they get access to this?
I will answer that. I would call my existing banker, and your existing banker, credit union, should be able to direct them to an appropriate relationship that they have. It was interesting. IEDC is actually eligible for the PPP program, and it never occurred to me that, frankly, PNC, which is one of our banks, is a 7A lender. So they may want to actually look to see where they maintain existing relationships, and they may already have the relationship they need. Many SBA 504 lenders, which many economic developers know fairly well, some of them are 7A lenders or have relationships with 7A lenders, or they could possibly become a 7A lender right away in order to help write some of these loans for the PPP.
Great, thank you. I want to remind everybody that the slides will be made available after this, and this is also being recorded, so you'll have access to that. There's another question too. Are self-employed or private contractors eligible for loans?
Matt, I think your gig economy kicks in here. Want to talk about that?
Yes, it absolutely does. There is a very specific intention to include independent contractors, sole proprietors, the self-employed, and even those with a limited work history into being able to access the loans as well. So that is definitely an option.
Great, thank you. We have a question on, with the SBA loans, what is the processing time? What are you hearing on the street?
Well, since the PPP just opened up today, we have absolutely no experience in how long that is going to take. I'm just going to have to punt on that one, and maybe we can report to you in 3 or 4 weeks to see if we're starting what we're starting to hear across the country.
Right. Now, I did hear yesterday, I know, on a call with the SBA, once you do everything online, just for it to get submitted, the whole time was anywhere between 2 hours and 3.5. So I don't know if that helps to answer some of the questions for some of you. There's another question about EDA, and what does the EDA define as shovel ready?
So that I actually tried to also answer that personally. You know, if I'm not sure that they have an exact definition. I could be wrong about that, but I would think if you cannot, if you have a project that cannot be started within 60 to 90 days, then it's probably not shovel ready. And but you know, I was a Fed a long time ago, and let me tell you what the pressure they're under. They're under. This is what we're experiencing is just absolutely amazing in terms of the level of unemployment that we've had so quickly. And so they're under a great deal of stress to make sure this money is not sitting in a bank account somewhere, either the CDBG funds or the EDA funds. So they're going to want people that can say, I can spend this money in 30 days. I can spend this money in 45 days. I can get it working very quickly. EDA has put money in revolving loan funds in the past, and that revolving loan fund money has sat there for years and not gotten used. That is not why Congress gave them $1.5 billion. They gave them money to make it work immediately. So, so whatever you're thinking about doing, and if you have a CDBG program that you oversee, whatever you're thinking about doing, think about how quickly you can force the money onto the streets so that people can get jobs.
Great, thank you. I know, Matt, you talked about the next bill coming up and having some with infrastructure, and I think, Jeff, you tried to answer that question online, but there were some questions that had to deal with funds for water or wastewater construction and anything inside that infrastructure bill, if you can address that quickly.
So there hasn't been any language that's been put out that I've seen related to what could potentially be put in there. What I would direct people to look at, you know, the House Democrats had put out their version of an infrastructure bill earlier this year. And of course, the president has had his infrastructure plan out for some time now. There will be clues within those plans as to what may or may not potentially be included in an infrastructure component on a fourth bill. But at this stage, you know, that crystal ball is still pretty murky. So your best chance for any kind of details at this stage is to look to what they've already proposed, because they'll lean heavily on that.
Great, thank you. The next question is, what can a small business, and we started talking about this earlier, if they don't have a relationship with a bank at all, what should they do?
I think they need to find a relationship with a bank. They need to, and maybe that's where your local economic developer is going to be helpful to that small business. Hopefully the local economic development agency can introduce them to a lender who will be willing to take them through the 7A process. You know, most of this will be done online, but at the end of the day, they're not going to get anywhere without having a lender who can verify certain things out of the borrower.
Great. I'm scrolling through these questions. Matt, do you see one that came up that we haven't really addressed? Looking through all of these questions, there's a lot of really good ones. I think, Matt, you may have already answered this question too about part-time employees and if they're included in the PPP. I think you had already answered that, or Jeff?
I'm not sure about the specifics on the PPP related to part-time employees and how the SBA will do that math on that. The part-time employees, or short-time rather, component of this that we talked about was related to the unemployment insurance program, where the federal government is subsidizing states that have programs for short timing. I will say, Mignon, that I saw a note in here, a question about, the timeline for impact for economic development organizations, that they themselves that are looking at these resources that have been made available, of course, depending on your tax status, but the impact for a lot of these organizations, our organizations, might be a couple months down the road for some. Some are feeling it now. And so we definitely want to encourage everyone to be looking at the resources that are in this third bill to make sure that in addition to helping your businesses and your communities, that you're also helping yourself so that you're ready and able with your services and your staff to respond as we sort of move through this crisis, even if you're not feeling it at this exact moment.
Good. Thank you. There's a question here. Can foreign-owned companies with less than 500 employees apply for the PPP?
I'm sorry, would you repeat that, Mignon?
Certainly. Can foreign-owned companies with less than 500 employees apply for the PPP?
I saw that question, and the answer is I would imagine they can, but I think we're going to have to follow up with that one. We have a relationship with the Senate Small Business staff. My gut instinct is that it's probable, but I do need to double check since we are talking about a foreign company. But it's operating here in the States. My guess is they're eligible, but we do need to double check.
Thank you. There's another one.
And to add on to that really quickly, it probably has something to do with whether or not they are a wholly owned U.S. subsidiary of a foreign company. So that will certainly play a role in it as well.
Great, thank you. Can a PPP lender authorization be expanded to include CDFIs?
You mean, could CDFIs become 7A lenders? I believe SBA is trying to add a number of different lenders as we speak, and I think they're trying to add some SBA 504 lenders. I do not know the process by which they're going to be adding 7A lenders. The best I can come up with is I'm of the understanding they're going to be adding lenders. CDFIs versus 504 versus credit unions. I'm not sure how soon and how quickly they will be able to add some of these folks.
And just to add to that, the intention is there in the legislation that other lenders outside of the 7A program are eligible to become lenders for PPP. And as Jeff pointed out, there's not been specifics on how that's all going to play out, but it is possible.
Thank you. Matt, I believe, and we were speaking earlier, you had said that IEDC was looking at putting up a whole question and answer page because there's some comments on here that a lot of these questions have been great and they'd like to see them somewhere on the website. And I know you had mentioned something to me that you all were working on that. Can you just let everybody know about that?
Sure, happy to. So, as you've all noticed, hopefully over the past few weeks, we've really stepped up some of the resources that we've made available. Frankie Clogston and her team in the KMD department, which handles a lot of our technical assistance and disaster recovery work, put a lot of effort into the RestoreYourEconomy.org website. And there's a number of resources that are there, including some toolkits and recordings of these webinars that we've been doing. But we're going to be adding to that, hopefully in the next several days, searchable FAQs that we'll be pulling from the many questions that we get. We are getting great questions that we are getting via these webinars that we've been doing. So stay tuned for that.
Another question, when you were going through some of the information on the slides, you said you were going to say more about the 501c6 and that you would address that a
Sure,
little bit
yeah.
more in the Q&A. If you could do that, please.
Jeff, do you want to touch on that, or should I take it?
Go ahead and take it, please.
All right. So when the bill was first released, we noticed that, and many of our members noticed that nonprofits were included for the first time in these disaster assistance loans, that previously they had been excluded, and there was a real desire on the Hill to acknowledge and provide resources for nonprofit organizations. 501c6s at the beginning, we were wondering if it was a deliberate exclusion or it was an omission that would be dealt with in the regulatory process, i.e. 501c6s would still be eligible. But it seems that it was a deliberate exclusion of 501c6s from being eligible for some of the aid. They are able to go for some of it, but for example, the PPP program is not eligible for 501c6s. And we've had some conversations over the past few days, and think that IEDC will be stepping in to this discussion. Already have stepped into this discussion, but other organizations like the Association for Executive. Why am I forgetting this? ASAE. It's the Association for Associations. Have put out a lot of good material on this and are sort of leading the charge here. At the end of the day, there was a limited amount of money that was available in this pot, about $350 billion, and it's remarkable that we're calling that a limited amount of money, but in this context it is. And it seems that there's a feeling on the Hill that they needed to direct that funding to those that needed it in this immediate sense from this. That does not mean that the door is closed to 501c6s in the future. And so we are seeing that as an opportunity to engage on this issue in the fourth bill for 501c6s to be included either as a fix to their exclusion in the third bill or as part of an increase in available funding. So if they take that 350 billion and make it 700 billion or more, that's an opportunity to say, okay, the pot is bigger. Let's expand to more organizations that are in need. So it's an ongoing discussion. It's not a closed door, and we'll continue to work on it.
Thank you. There were some questions there, and I think you can find this on the websites, but it said they cannot find the SBA list of the 7A lenders and a link to that, and I believe that link is on our resource page.
It is. When folks get that, they can maybe try Googling 7A directory, but it is on the SBA website.
Okay. There's a lot of technical questions, and I don't know if we can actually answer those, but I'll throw it out there.
We'll be honest if we can't.
Right.
And Jeff is answering a lot of questions in the chat box. He is just being super productive there.
Yep. And those are, I think the way that Jeff's done those are send to all. So if you're scrolling through those, you should be able to read the questions and see Jeff's answers on there. I think I got the answer to this one yesterday. If nobody can answer it, it's if you've already terminated or furloughed your employees, do you need to hire them back before you apply for the PPP?
That's a good question. And of course, with the caveat that you should seek official guidance from the official sources. But the way that it's written in the bill, if you've laid people off within the covered period, your ability to access the loan forgiveness components of it will not be impacted if you hire people back during that 8-week period because you received the PPP. So in a roundabout way, I don't think you need to hire anyone back in order to be able to access the PPP. But if you want to, and I'm assuming everyone would, get the maximum allowable loan forgiveness, you would need to bring them back on board during that period, because the amount of loan forgiveness is proportional to your payroll and what you've kept on.
Right, Matt, and that's what I heard. I heard that you have to hire that exact same employee back if you've let them off.
Yeah, I'm not sure about that level of specificity, but it's possible. Those are the types of things that get translated by the agency, and they set those rules.
Let's see. Are the $10,000 cash advances always forgivable, and is it in advance dependent on if you're approved for a larger loan?
So from my understanding is within 3 days of your application for an EIDL, you are supposed to get a $10,000 grant. Now, somebody on this who sent in a question said that they're hearing that it's up to 10,000 and some people will get less than that. I have not heard that one way or the other. Second, the $10,000 up, if they are right, up to $10,000 grant is not dependent upon whether you get a loan or not. And that is very clear in the directions that SBA has laid out on their website. So I'm hoping it is true, 10,000, and it is supposed to be irrespective of whether you get a loan.
Okay, I'm going to try and get to, I think we have time probably for one last question. I'm trying to find one here that, here's one. There was talk that churches would be allowed to apply for the PPP.
So the statute is very clear. You know, our Constitution refers to the separation of church and state, and if the federal government started funding or lending to churches, that would just offer up an opportunity for a court case in a minute. And as I've read through some of the documentation, churches are just not eligible for many of the things that are possible here. Now, if a church has a separate organization that is providing some type of shelter program that is not teaching religion, then there probably can apply for PPP. But if it's just for the church activities, I'm pretty confident from everything that I've read that is not going to fly.
Okay, thank you. I think we've just about come to the end of our webinar. Am I correct on that?
Yes, we were scheduled to go till 4 o'clock, and that we are just running up into that. We do want to be respectful of folks' time.
Right, so thank you all very much. Like you said, these slides will be available. Thank you for joining this call. Matt, do you have any other closing remarks, or Jeff?
I will defer to
I would just, I would one, remind people that while we did this webinar on a Friday afternoon, we are holding a webinar every Monday at 3 p.m. Eastern Standard Time. This coming Monday, we're going to have Richard Florida and Professor Stephen Pedigo of University of Texas at Austin, the LBJ School. And they're going to be talking about 10 things that communities need to be thinking about now in order to get their community restarted. We will have a week from Monday, a webinar on technology tools that you can use now to support your economic development program. We will have a program on use of the CDBG program for in these circumstances, and then we're going to learn experiences from people outside of the United States. How are they addressing these issues around COVID-19 and what they're doing? So we've got a whole series of webinars coming up. I've said it a couple times and answers to questions, go to restoreyoureconomy.org. We have a ton of information there. Matt and Erica, among others on the IEDC staff, will be putting FAQs together that answer questions from today and this past Monday, where we talked about a number of the federal programs. And all of these things are being recorded, and you can download them at a later time. I want to wish everybody good luck. This is a real difficult time for many of us. And just when we thought we understood our day jobs and what we were to do with our lives and economic development, this just kind of kicked the feet out of many of us. So we have to be patient, and we have to figure out what we can do to help our communities. Mignon, I'm going to let you end this for us.
All right. Well, thank you all so much for your time and your patience with us, and have a great weekend and stay safe. Thank you again, Jeff and Matt, for the wealth of information that you provide and the direction that you give and provide for IEDC. Thank you.